I don't even know what I was trying to do. Hey there, this is Sherelle Martin with Nitram Financial Solutions, where we teach bookkeeping without boundaries. So last week we talked about what did I tell you? I shared with you 5 ways to accurately record accounting transactions. Okay, that's what it was. 5 ways to accurately record accounting transactions. And one of those ways was to get the source document. So this week, I wanted to go in a little bit deeper on the source document, what it is, why it's important, because it comes up as a contention point often in the bookkeeping and accounting space. So, what is a source document? A source document is basically it is the paperwork that supports the transaction that is being recorded in the business's books. So, and what that means is depending on the type of transactions, there are certain things that validates that that transaction actually is what we're saying that it is. And so I wanted to share with you exactly why that's important. So, the first reason why that's important is that it validates to anyone, basically, it validates what the expense is and what it's for. So, as an example, I always use the example of like Costco's, Walmart's, the Targets of the world, the big box stores, right? You can go in there and you can buy anything under the sun. You can buy clothes, you can buy office supplies, you can buy furniture, you can buy groceries. And so, because of that, the receipt is the source document that tells you when you're recording the transaction what exactly was purchased so you can know how to code it, right? And so, if you go into, if you have a whole bunch of Amazon receipts, again, the person could be buying anything, but you want to validate that the expense is what it is supposed to be and that you're putting it in the right category, right? So if they're buying a computer, if they're saying, yeah, we bought new computers for the office, you get the receipt that says from Amazon, computers were purchased. So you can put it in the right bucket, right? It validates also too to the IRS. It proves to the IRS that says, hey, yes, this business put $1,000, $2,000, whatever the dollar amount is, into office expense for computers and equipment. Here are all the receipts to validate this, that's what they purchased, right? So it proves to the IRS that what you coded it in, what category you put it in, is the category where it belongs. It validates to the business owner and anyone else who looks at those financial statements or documents that that's what the transaction actually was. And for you as the bookkeeper, it ensures that you're putting it in the right bucket. So oftentimes you will get contention because people believe that, oh, I put it on my credit card, and so the credit card statement is proof of what I bought. Or they send you a email that says a payment confirmation. Well, the payment confirmation just says you processed the payment of $500 on said card on said date. It doesn't say, and it might even say where it came from, but it doesn't tell you what it was. It doesn't tell you what was purchased. So a email confirmation that doesn't give you all the information is not an actual valid source document. It's not a receipt. It's just a payment confirmation. Those are two totally separate things. A receipt, which is what you want when you're doing expenses, tells you what store was purchased from, the date it was purchased, the dollar amount that was purchased, and a description of what was purchased. The description is the key because that is what tells everybody what was purchased. And so when you're doing bookkeeping and you're recording transactions, be sure to get the receipts, especially when it's something that you know could be a red flag, or it's something where you're like, I don't even know what store that is. I don't even know what they could have possibly purchased. You want to make sure that you're getting the receipts for those documents and or vendor bill. So a vendor bill is the equivalent of a receipt from the expense side of the table, but the difference is an expense says the money went out the door right now and you got a receipt. So think of it like when you go to the store, you give the cashier cash to give you a receipt. That's the receipt. But when you're dealing with contractors or vendors, they're going to issue a bill that says, hey, we performed said services or we sold you these products for this amount and we are expecting payment. So it's paying someone after the fact. So that also can serve as a source document because it, again, details out who it was purchased from, the date, the amount, and a description of what was actually processed. So, or purchased. So I wanted to explain that in a little more detail because, again, you are going to get pushback and a lot of contention around people saying business owners not wanting to give you the things that you request. I'm in the middle of it. I'm in the middle of it right now, but it is a constant thing that I'm constantly have to explain. I need the documentation. Even in the case of bank reconciliations, you need the bank statement. So if someone says that, the case that I'm doing right now, the client I'm working on right now is they didn't have any transactions for maybe 5 or 6 months. They didn't use the card. And then they used the card, and there's a balance and they paid it off in the next month, or they made a payment in the next month because now they're using it again. And I'm like, well, I need the bank statement to reconcile the account. And they're like, oh, I charged a subscription to it. I still need the bank statement. I still need the bank statement. It doesn't matter. And I hate to say this because it sounds bad, but you can't take the owners or the business owner's word for truth. You have to have the actual source document to support you and validate that what you're doing is correct and accurate. So always get the source documents, the bank statements, the credit card statements, the receipts, the vendor bills, whatever it is that you need to prove that transaction is what it says it is. Now, what I will say, a lot of the accounting softwares now allow businesses to attach these receipts to the transactions. So when you get the receipt, you can actually attach it to the transaction. Or if they're using the accounting software, they can upload it to the software. Or if they're using like an expense management system, they can upload it to that system and you can sync it into the accounting software. Like there's a lot of different ways. There's a lot of different ways that you can get the information from them without them feeling like you are not trusting them or not believing them, which in fact we kind of aren't, but that is what it is. It's not a negative thing. What I always tell our clients is that we're helping you audit proof your business. So in order for your business to be audit proof, we have to validate and prove to the IRS that these things are what we said they are. And the only way to do that is with the actual receipts. So when you're dealing with recording transactions, specifically expenses, you want to make sure that you get the source documents and making sure that what you receive contains all of the things on it that you need to know. Again, you need to know that not only where it was purchased from and the date and the amount, but you also need to know a description of what actually was purchased so that you can ensure that it gets coded correctly. It also validates if the charge is truly a business expense or a personal expense. Now, if they tell you it's still business and you believe it's personal and they say it's business, and then it's business. But if they get audited, that's on them. But at least you have documentation that shows that this is what was purchased, and then add to it the note that per business owner transaction was a business related expense. So make sure you get your source documents so you can record your transactions correctly. See you next week.